Hey guys, welcome back. So 40502 is the base that we must hold. The Bulls must hold and defend this week coming into Powell. All right, guys. So let's take a look at our wave counts for the Qs. Let's take a look at our wave counts for the SPY and let's dissect this. Let's take a look whether or not this is going to be possible if the chart that you have in front of us is at play. Because if this zone is breached, if we start making new lows, then it is likely that we have to focus our attention to our ending diagonal wave structure, which suggests that this is the actual wave 2 and we may hit new lows. So before we dive into the analysis, guys, consider subscribing to the channel and give this video a thumbs up. So I've been favoring this count for quite some time and it's still at play, although it is falling out of favor given the fact that the wave 4 is a little bit longer in time and magnitude than its counterpart of the wave 2 of the same degree. Okay, so it isn't quite displaying the guideline of alternation quite nicely. Not a big deal, but it's something to really consider here. All right, now out of our COVID lows, this is the wave 1, 2, 1, 2, 3, 4, and 5 to the wave 3. All right, we're looking at this as the ABC, or a complex correction down into the wave 4. Now our fib targets here have always remained at the 411 to the 392. That's the range that I'm looking for the wave 4 to complete. Obviously the wave 4 still has some ways to go, as long as we remain north of the wave 1. Even if we keep on going lower, I will stop favoring this count and then just shift focus to our alternate, which I'll review here in just a second. So the 4502 is a critical support zone because it is also the support area here back in May of last year. Okay, coincidentally, we bounced right at it, May again. And Powell this Wednesday is going to literally dictate whether or not this market should find support and bounce, or we should start breaking lower. Okay, I don't anticipate I don't anticipate price action to be much of any activity tomorrow. So for that reason, Wednesday is critical. Now let's dive into the 1 hour time frame and let's take a look at the wave structure from January highs. So taking a look at this, right, our 40502 is our support, which is again it's sandwiched between the 38 and the 50% retracement. But our next target and levels to watch for resistance are going to be at 429 and 435. Okay, 429 because this was a double top here, and then that's where we had that bull trap that I mentioned last week. And then the 435.55 is our pivot point on the wave A. Okay, so if we are to start bouncing this week, okay, even after Powell, and we see a breach above these two zones, then I am going to start considering a long position in this zone and keeping this tight stop here at 4502 as my stop loss, because that would mean if we break this low, if we fail, if we don't find volume, if we don't find at least the evidence of 5 waves up, okay, and 3 waves back in the smaller degrees, okay, and we don't hold 40502, then it is likely that this count is not at play, and we're going to focus our attention to our ending diagonal count, which looks like this. I've reviewed this with you guys quite some time now. All right, so I have some key levels. This count may go down towards the 355, 360. There was a gentleman in our Discord group that pointed this out, so I want to show you guys real quick. Okay, he drew a channel from the lows of 2009, which makes total sense, right? He channeled this whole rally from the 09 lows towards our highs over here, so connecting the two most extreme lows towards this resistance top here. And you start noticing that we have the middle trend channel, right? The middle trend channel was support back in June of 09, back here in September of 2011, again on the 6th on February of 2016. It was a bit of support here. We lost it briefly in 2018. COVID hit, made a new extreme, so we connected these two. And now what appears to be is that we may be gravitating back down towards the center line of this trend channel. So in order for us to confirm this or find more evidence that this may be more likely, I like to take you down to the 1 hour time frame to show you what I'm looking for. So actually the daily time frame, which will be a little bit better to read. So with our wave structures, right, if this is the wave 4 of the cycle degree, all right, we do have evidence. While this could be looked in different ways as a 5-wave progression into the wave 3 like an alternate count, but also in 3-wave up into the wave 1. Okay, our support zones in the wave 2 come in between the 23 and the 38.2% retracement, which coincidentally comes in confluence with the center line of that trend channel. Okay, so even though the 23.6% retracement that you see here in yellow is a common fib level, but it's very shallow for a wave 2 pullback, it is likely and oftentimes that we see price action be in the, well, especially if it's in wave 2, it becomes a zigzag, right? And then it becomes a little bit more deeper, trying to shake out traders in the long positions. Okay, that's what wave 2s are normally designed to do, and when they unfold as zigzags. Now you see that this is also further confluenced with this pivot point here, as it was acting as resistance before it started breaking out to new all-time highs. So there is an argument to be made that this zone, okay, this zone here between the center line of the trend channel, the high of the September 20th movement here, excuse me, and on top of that, the 38.2% retracement could be our levels of support should 40502 break. All right, so let me take you down to the 1 hour time frame and let's take a look at our wave structures here, what that would look like. Now, this could be viewed in many different ways. All right, one of them is being like this. If we break this low and we hold support between the 100% and the 23.6, which the 100% is an extension between A and B, okay, that gives you equality in the wave C, and the 23.6% retracement is the retracement from the COVID lows towards the January highs, then this zone is a good area to look for some type of support. However, if we break this low, all right, sorry, let me just backtrack here. Sorry that I confused you. So this zone here, these two fib levels will confirm this 1, 2, 3, 4, and 5 count to complete the wave C or wave 2 should we break the 40502 level. But if we see a lot of bear volume and this week becomes very, very hawkish, right, and hawkish and bearish, right, at the same time, obviously, with Powell on Wednesday, and we see extreme volume to the downside, then perhaps the wave 2 will be shifted lower, and this is just another 1-2 scenario. Okay, and let me illustrate to you guys what that would look like. So this would be a 1-2. All right, so this is a 1-2, and then another 1-2, and then the 1, 2, and 3, 4, and 5 to the downside to complete the wave 3. Now this will be a deeper correction in the wave 3, and there'll be a lot more vertical and more accelerated, and you'll start to see it as it unfolds. Okay, but for now, I am going to just work with the idea that this wave 5 of C of 2 is about to complete rather at this level, 23.6% and the 100% extension, 398.66 and 396.35. All right, guys, so you already know what you should be looking for coming into this week with Powell. And just taking a quick look at the Qs, okay, the triple Qs, also the same deal. I will review this chart here. So we have the A, the B, 1, 2, 3, 4, and then we might be making our final fifth wave of wave 2 down towards the 290.80, 290.19 and 288.69. Again, this also comes in confluence with that trend channel that we were looking at, okay, that is a little bit more closer in price action here at the Qs, and the middle of the trend channel comes in towards that $293 region that I looked at, that I just showed you. And then once we find support, we may be pushing higher into that wave 5. That, obviously it could be anywhere here. I'm just arbitrarily leaving it up there in space. So yeah, guys, so a lot to cover this week, a lot to look forward to. So just be sure to keep those levels on the SPY and watch, because it is critical that we maintain this level of support, that 40502, okay, and we don't break that, because otherwise obviously we'll be looking for our alternate account, which suggests more downside to go. And yeah, so let me know if you guys have any questions. Let me know the levels you guys are looking at in the SPY. Leave your comments down below, and I'll see you guys tomorrow. Take care.